We've purchased over 20 businesses with our partners and advised on about 20 others. And here are the 3 best and 3 worst deals that we've experienced. Now, our third best, surprisingly enough, is a package of edible arrangement stores. Now, this venture was successful because as a part of this purchase, we gave equity to a longtime general manager who was just an absolute rock star within the franchise system. Now, since our first purchase, which we only put about $80,000 down, our 4 stores have grown into 9 stores purchased. And now 3 of those 9 we deliberately closed. We bought them to close and serve those zip codes out of our existing locations. Now, after just 2 years, the business is worth about $1.5 million more than what we paid for it, meaning that $80,000 has grown to about $1.2 million to $1.5 million for our partner. We haven't taken any cash out of this. There's been no distributions. It's just been reinvested in the business. And we also haven't had to put any new money in either. I'll say this story, it's much closer to its beginning than its end. Now, our third worst, it's a company that transports water to drilling sites. So right as the deal was about to close, the company lost its largest customer and they cut rates for their second largest customer, which contractually the seller was required to disclose and would have ended the deal. But the seller did not disclose that information. Deal closed, and immediately the first day owning the business, we realized this is not the business that we were sold. This is not the business we had done the diligence on. Now, that non-disclosure was a breach of the contract. Luckily, we, at this point, had started taking out reps and warranty insurance. So it was a violation of the representations and warranties of the contract. Now, this is still an active situation. The insurance company has already agreed to pay us about $560,000. They're in the process of paying that out. But we did claim about $2 million of damages. We had to hire a law firm to help us get that other $1.5 million. Now, I think this deal is eventually going to work out. We've dramatically cut costs. We've really changed the cost structure of that business. We are currently surviving, but not thriving. And we have these insurance monies coming in the relatively near future, and any other losses we might try to recover from the seller as well. So I think this is going to end up okay, but it's not been a fun ride. Our second best is actually a restaurant in South Carolina that we bought for $2.9 million. We originally projected the business would generate about $40,000 after debt payments per month, which was going to be a great investment that was going to really kick off a lot of cash flow. And once we got in and we found out there was a lot of cash coming in off the books that we hadn't accounted for, the seller had said there was some cash. We had modeled in cash expenses. We went through and found the expenses they were paying in cash, but we didn't give any credit for the revenue they were paying in cash. And it turns out the business is actually generating $80,000 per month in cash flow after making its debt payment, just blowing our expectations out of the water. And we just installed a POS system, and once we run the business with clean books for a little while, I think this business that we bought for $2.9 million would sell for over $5 million. Now, we bought this with $150,000 down, so we basically got the initial investment back in 2 months. Our second worst was a gym in California. Now, insurance companies, they have these programs called Silver Sneakers, as one of the insurance companies' brands for it, where they pay for senior citizens to use private gyms. So typically what they'll do is say they'll pay $5 per visit, up to 10 visits per month. Now, we believe the seller was entering fake visits into the system. So once someone came to the gym one time, he took the info he collected to essentially say that that person came the maximum amount of times per month from then into infinity. And now we allege that because he trained our partner on how to do it his second day after the transaction. Now, without that illegal activity, the business quickly went from a strong profit to a loss overnight. Now, this one was a while ago. We've already had the arbitration hearing. We're expected to get the results back in the next month or so, depending on when this video gets posted. We're very optimistic that the arbitrator is going to rule in our favor and we're going to be able to recover the funds. So the gym, right now, it's around break even. Again, surviving, not thriving. And once we get the payments from the seller, if he pays, just because you sue someone and you win doesn't mean they pay. If he pays, we should be able to get out at a break even. If he doesn't pay, it's going to be a loss. Now, I think what's going to be one of our best deals is a water well drilling company in Missouri. Now, we bought this with $75,000 down, and we have an amazing operator that we're partnered with that he has a long history in that industry, and opportunities just keep coming to us. It's a spoil of riches. Our biggest problem is there are too many great opportunities in front of us at any given time, which makes it hard to maintain discipline. We just have to pick which one is the best one and pursue that one, because you can't realistically pursue them all. Now, in this business, in both the growth that we've seen organically and inorganically, I feel like this is a business that could grow to $50 to $100 million in the next 5 to 10 years. Obviously, making that a home run with just a $75,000 down payment. Our worst was a FedEx line haul business, which again was another victim of what we would allege is fraud, which is a reoccurring theme. And one way that we combat this is to try to not be a victim of fraud again, is of course the reps and warranty insurance, which we learn that the insurance companies are slow to pay and they try to find reasons not to pay, but eventually they will. And we're always improving our due diligence process. But at the end of the day, if someone is willing to commit outright fraud, there's no way to catch it. So for this one, we believe the evidence supports that they had run major expenses through other business entities, making the business look much more profitable than it was. And they also backed out of hubs right at the closing when there was no way for us to see that in the financials. We have on record where they had lied to us and they had lied to the bank in writing during the underwriting process. Now this one, it's going to mediation pretty soon. One thing, difference between mediation and arbitration. Arbitrations, the results are binding. Mediation, the results are more of a suggestion. But this one does have a lawsuit that's going to mediation. We have been able to really do a lot of things in the business. Again, this is another surviving, not thriving. The business is getting by, it's doing okay. And then hopefully once we get the lawsuit settled out, it will be in much better shape. So there you have it, a few home runs and a few really not fun situations. We can't offer any guarantees in the small business space. Buying businesses is extremely risky. The only guarantee we can give our partners is we're gonna be with you every step of the way, through the good and through the bad. If you want to partner with us, go and click on the link in our bio and apply for our partner program.